What's up, traders, and welcome back to another video. A lot of things happened in the markets this week. There's a lot of volatility, lots of whipsawing that occurred, lots of Fed speakers that just made for an overall volatile week. I'm going to dive into some stocks that we covered last week, just kind of give you an update on where things are. But overall, we're going to just cover the S&P 500, the NASDAQ, small caps, and then we're going to look at some key moves that are happening in the EV industry. So Tesla, Rivian, Lucid Plug, ChargePoint, and then we'll also dive into Costco, Amazon, Facebook or Meta, Netflix, GameStop, Bed Bath & Beyond, and Palantir. I don't know if you've seen the news. The CFO of Bed Bath & Beyond actually just jumped off a building in New York on, I think it was Saturday or Friday. So that was made headlines. So lots of things going on in the markets. We're going to look forward to what's going on in the economic calendar. There's a lot of key dates coming up. We also have CPI for August being released on September 13th. And then also, I did mention that we're going to look at some fundamentals just from like a cash flow perspective. What are businesses actually worth? I think you're going to get a lot of value. Make sure you guys hit that subscribe button. Let's hop right into it. So looking here at the S&P 500, you'll see that on the week, we had that down week, just as we talked about last week, that there's a lot of volatility. Quantitative tightening was doubling on September 1st. We actually had a huge fake out on Friday. We broke above some key levels, and then around noon on Friday, the market just tumbled and headed lower. So a lot happened. Unemployment ticked up from 3.5% expectations to 3.7% on Friday. Where's that here? So you can see that here. This was the forecast. This was the actuals for August. So that was a little surprising. So what's going on with the Fed tightening as well as the balance sheet roll off? There's more layoffs. Just like headlines, Snap laid off 25% of their workforce. You're just seeing Ford and some other auto manufacturers. A lot of the real economy is starting to roll over because rates are going higher. Liquidity is less bountiful in the market. So companies are starting to shell up, take shelter for what's ahead. So that's just something to look for. On September 12th, we're also going to have U.S. futures equities rollover, which usually creates a pocket of volatility as well. And then on September 13th, the day after, we have the August CPI data release at 8:30 a.m. So a lot on the table going forward. If I want to give you just like a post-mortem of what happened this past week, you'll see we did have that big down day on Friday, but let's go into like the 15-minute chart so you can see how like price moved at certain key levels. So obviously this was the high that we topped out at, and then we had this move lower. There's kind of like a mini bear flag. We broke down, and then we just kept breaking down and testing some key levels. So you can see that price likes to come up to this like 401 level, and also at this 405, 406 level, and then also down here around 390, which was the previous low from July 26. And then we still have this like 20% level that will likely end up testing around 383, 384. So price actually broke above on Thursday to Friday, and then just an absolutely brutal rejection for bulls who are spending a lot of their ammunition trying to push price higher. And then we broke that 395, 396 level, and then came back down to test 390, and we closed the day just with like a little short covering right there at the end of the day. I do think that SPY, especially, with how price has been moving with these brutal breakdowns for bulls, that the bears will continue to control and we'll head lower towards this 384 level, which is the 20% level. This might act as support the first time that it touches it, and then we might bounce around, maybe come back up to 390. But ultimately, I do think that we'll probably break this level in September and head lower. Now, some targets to give you an idea, we could come down towards this 373 level. We could even push towards the lows for the year around 362, 363. I think this is all possible, especially with fiscal and monetary policy. The Fed has been just absolutely relentless raising rates. I think in September FOMC, which, let's see, for September, it's the 20th and 21st, so that's when the data will come out. I think price will head lower likely into that, but it really also depends on CPI. If CPI is lower than expectations, then that gives the Fed some breathing room. The market will likely rally. If it's at expectations or even higher, then the market will continue to head lower, because that means the Fed has to continue to step on the brake with quantitative tightening, if you will. So that's just some key dates to look for. If you look at like tech, for instance, it's still like in the same sort of pattern here. I think on the daily, it actually looks a little bit better. You can see that price came down, broke below this 297 level, which is relatively key because it acted as support back in March of 2021. I think we'll head lower, likely down to this 282 level, 280 level. That's probably what's up next for tech. IWM also broke down. If you actually draw a trend line here, you can see that it'll likely test this. If it breaks that, it's bearish. We'll probably come back down to 169, and then ultimately we'll probably test this low here at 163. So that's something to watch for small caps. Getting into the EV space, this has just been moving a lot quite recently. What we talked about last week was Tesla and whether or not it was going to break above or below this range. If it broke above, it would likely retest this top of the trend line. It didn't. Broke down below. You can see it kind of double back and retested it, and then once it retested it, it pushed lower, which is bearish confirmation. If you're just looking at candlestick theory, this is pretty bearish on price. We'll likely try to push down towards this 207 level. To give you some ideas of like when to take profit if you did enter the trade, you could wait till this 255 area touches to take some profit. If that breaks, then we'll likely push much lower. We'll probably come down to this 234 level, then ultimately maybe down to this 208 level. So some key levels to watch there. I would also just time it with the overall market on support or resistance. Rivian's in an interesting pattern. If you look here, we can look at like the 2-hour chart. You can see that, let's see, on the lower end of the trend here, we've actually started to test the bottom trend. And you can see that this actually is acting as a bear flag. So if Rivian breaks down below this like 32 level in the coming days or weeks, then we're likely to head back down to this previous low at 2440. And then ultimately, likely we'll come down here to this 1850 level to test. If you look at Lucid, it's been rolling over as well. This is less of a setup if you missed it because it already broke down below. You'll see here it broke down below, so it's already headed lower. Tesla's in a bearish setup, Rivian's in a bearish setup, Lucid's in a bearish setup. If you look at Plug, you can see here that it came up and retested this area. It rejected twice now. If it breaks below that previous low around 2536, probably going to head lower to 1950, then ultimately down to 13 again. So this is some key levels to watch. If you look at Charge Point, kind of in a similar pattern. It came back up here to this supply range from 17 to 19, and it rejected. Now if it breaks below here, we're likely to come back down to this 1124 level. So overall in the EV space, I do think that the recent run up is likely starting to rotate out and we'll have a push lower. Costco we talked about, where it broke this uptrend and then it's headed lower so far. There's actually a pretty bearish rejection on Friday as well, below this 534 to 535 level. I'm looking to see if it can break below 509. But ultimately, I do think because we've invalidated this uptrend from May, even retested it there on the first breakdown, and then came back, retested that supply zone, we're going to head lower. So overall, like across all of these stocks, I'm just bearish because the overall market is starting to roll over. Volatility has also been a bit higher, and so even looking here at like Amazon, for instance, I like to look at a lot of the big tech companies. So we'll check out Amazon first. You'll see that it actually broke above previous support that acted as resistance and broke below. So now I do think we filled this gap here, which is a gap fill reversal. Anytime you usually fill a gap, you'll reverse. So we bounced and then we rejected again all in one day. If we break back down below this, it's really bearish. Amazon will probably come back down to this 102 level. It might find some support here around 109, so that's something to watch out for. Looking at Meta, or previously Facebook, this stock has just been absolutely abused over the last several months. You had this huge gap down on earnings, and then ever since it's been in this downtrend. It's actually trading well below, where pre-COVID highs were, and it's actually getting near the actual bottom from March of 2020. I do think that even though I think this company is undervalued, and we'll talk about its cash flows here in a minute, but I do think that it'll likely probably break below here just because the overall market is headed lower, and because Meta is a big portion of that, it'll also likely sell. So this will actually be at a severe discount if you're looking to pick up shares. Highly recommend. Netflix, this has just been absolutely brutal with all the other streaming services coming online. I think if you're looking to go long a streaming service, Disney's probably the best bet, just because not only do they have the streaming side of the business with Disney Plus, but all the different parks around the world. Everyone's going back, spending time outside. China's still like in lockdown, so they'll have some pickup there on growth and revenue. And then as they continue to roll out some coveted series in Disney with like Star Wars, Marvel, etc., I think that Disney will be a great buy long term. But you'll see here, like, Netflix just absolutely got destroyed. There's these gaps that were created and were never really filled. I think at some point it will bounce and push higher, but you could continuously play this like 248 line as resistance and then have your stop loss a little bit higher. So let's try to put in just a short here so you can come back to it later. Say you want to have like a $10 stop loss, then target back down to this 163 level. That's a pretty good trade when you could just buy like 2 or 3 month long contracts and just set your stop loss. This is likely to play out. Let's look at some meme stocks as well. So like GameStop, Bed Bath & Beyond, those have just been getting absolutely crushed after the recent run up. Memes are usually often the last leg up before the market reverses, and then once the market reverses, you'll also have memes participate on that downside, and that's what happened as well. Ryan Cohen also sold out of BBBY, so you had that breakdown, and then because of that, since Ryan Cohen's also in GameStop, what if Ryan Cohen decides to sell at some point his GameStop position, and then so that's kind of been what's happening here. I do think that GameStop will come down to this 1950 level here in the coming weeks, so that's something to watch for. If it comes back down to this $10 level, I expect this to be $10 to $11. That's a great position to go long. Been talking about this for months in my Discord. You could probably enter contracts with an expectation that it'll go to at least $20 from here, which is a significant upside potential. But even if it breaks back above that $20 level, so if it goes down to 10, it breaks above 20, you'll see a huge push higher. It could even come up to this $30 level. So really excited, just being patient, waiting for GameStop to hit that $10 level. I think that's going to be a great position to play to the upside. Bed Bath & Beyond, this is kind of like the same setup that I think GameStop is having. So when it comes down to that price level, it's going to act as support and push higher. This is the same thing that happened with Bed Bath & Beyond. So looking back, it did come down to this like $4 level. And once it tested that, which I think, so yeah, once it came down and touched this level, it pushed higher. That's kind of the same thing that happened. Like it's even more pronounced if you look at it on the weekly chart. And then it even came back and retested this same high from February of 2022. So like a lot of these meme stocks are very speculative. There's not really any sort of long-term play here from like a shareholder standpoint. It's all driven by social media. You have all these apes online who are just buying memes thinking that, I'm going to make a quick buck. It's kind of similar to cryptocurrencies. But you could play these technical levels as support and as resistance. And that's just like a really good way to make a quick dollar, is just being patient and waiting for those actual price levels to hit. Looking at Palantir, this is kind of an interesting one. So you had this bear flag, which you can just see it right there. I'll draw it for you as well. We had that breakdown. But something interesting with Palantir is it actually also had a megaphone pattern. So if you can see it here, price came in, touched this level. So you can see it broke down below. So it came up into this pattern, broke down the low. So you had like two bearish patterns play out, and that's actually really bearish. I do think that Palantir, it's probably a little bit too late to enter now, but it even rejected here around 840. This pattern is likely to target around mid 550, 540. So I do think that ultimately it'll come down to this level. That will probably act as support. You could play along here if you're not already in, but I'm playing to the short side for now. So I think that's like a good cover of some stocks that I'm looking at. We talked about Apple before. It finally broke back down. Before I go into some fundamentals, this was just like a key level that I looked for. Is you'll see that this previous lower end of the trend acted, which you can see it here even better, is it came up, broke above, broke below, came up, retested that uptrend, and then it's now just closed below. So we'll see how price moves here. If it holds below like 155, 157, then that's really bearish for Apple. You're going to see a push lower, and same thing with the overall market, since Apple's a bit over 7% of the S&P 500 now. And here's a master list. We talked about this briefly last week. This is just really a watch list. It has a bunch of different statistics here, like market cap, cash debt, the enterprise value, price to earnings ratios, the beta, so how much it moves with the overall market, the correlation, the one-day change, the 52-week low, 52-week high. This is a visualization of where price is in the 52-week range. So you can see the Apple's right in the middle. Some of these other stocks like InPhase, that's trading near the highs. AMZN, Adobe, or AMZN and Activision Blizzard. And then some of these are really just trading right near their 52-week lows, like Nvidia, Shopify, just getting absolutely hammered with consumer spending likely to head lower. It'll be some time before Shopify, Airbnb, some of these other consumer type stocks actually rebound. So far we have Apple and Meta models built in. So this is Apple. This is the summary tab that I have here. And then this is the actual model. And then using different valuation assumptions, you can get an idea of what price is actually worth. So this is like the base case scenario. Apple would be worth $114.51. The current price is $155. That's a 36% over what our current actual valuation of what we think Apple is worth. So Apple is overvalued. From a downside case, Apple could be worth 106, which is even more overvalued. And then even looking at an upside scenario, Apple would be, if it was growing at 11.6% in perpetuity, then it would be worth $160, which is pretty outrageous. Even if we just put in a terminal of negative 1% growth in the outer years, it's still overvalued. So overall, Apple is extremely overvalued. It is the largest passively driven stock in the whole S&P 500. So it's likely to kind of stick around with what the overall market is doing. We'll see how that moves in the future. And then just recently we built out a Meta Facebook model, which is actually very undervalued. So looking at cash flows, you can see this is the income statement. I also have the balance sheet and the cash flow statement built in here as well. But just looking at it from a purely cash flow perspective, even in the base case, which would be a 3% growth through 2030, and then negative 2% in the outer years, Meta would actually be worth $256, which is a premium over the current price. So current price is $160. Base case says it's worth $256, so you could capture the upside there. Even in the downside case, it's still undervalued, and especially in the upside case, you can see you can almost double your money, about 91% upside, or a 50% undervaluation here. So overall, I think Meta's a great company to buy if you're looking to play it long term. But like I said, you can always be smart with when you actually enter. You can average in over time. Dollar cost averaging is always smart. I think from a technical perspective, we might head a bit lower. So that's just something to think of. But if you're looking to hold on a long enough time horizon, 5 years from now, Meta's likely to push back up to this like $220, $223 range. So you can capture that upside there if you're just looking to play shares. So that's it for this video. Just be careful this upcoming week. A lot on the calendar. Not this week, but the week after. And I think a lot of the market will try to front run what's going to happen with CPI, FOMC, and the futures equity rollover dates. So just be wary of that. Thanks for watching. Make sure you guys drop a comment on any stocks you want me to analyze. Hit that subscription button, and I'll see you next week.